Welcome to the Real Estate Investing Morning Show with your hosts, Wayne and Gabby.
Good morning.
Good morning, real estate investors, and welcome to the Canadian Real Estate Investing Morning Show. On today's show, we're going to be diving into real estate investing Q&A, a live show where we got some questions that have come in from investors across Canada. We're looking for answers, and we're going to provide those answers for you and provide some free coaching. Anything else that you guys need help with as well, for those of you guys that are joining us on the live show on YouTube right now, feel free to put your questions in the chat. We're going to answer them. Again, you bring the questions, we bring the answers, you go out, you take some action, and you better your life, you grow your portfolio, and everybody wins.
Yes. Wayne, I know that you love when we have like a topic to like dive into, because it makes titling these episodes easier. It makes people finding them easier. But personally, I love when we have like a smorgasbord of questions that we get to just like almost like rapid fire, like, okay, next. I mean, I think we have 3 or 4, if I'm not mistaken. So it's not rapid fire, but still, I like it.
I have a feeling that these questions today are very relatable to other real estate investors as well. So you guys get the benefit of learning from what other people are working on. But I feel like I hope that it might spark some more questions and maybe some things you haven't thought about, or maybe something that's been on your mind that you haven't had the courage to be able to ask about. So yes, I do agree that...
Just good luck titling it later.
I do agree that these episodes are difficult to title. These are super valuable episodes that provide so much answers and, lack of better terms, value for real estate investors. The problem is that real estate investors are looking for a clear title when they're choosing which video or which podcast to listen to. So it's hard for me to choose, we got a question about an extension from yesterday's episode about garden suites. Someone heard about us talking about garden suites, and they have another question about garden suites, which is great. But that's going to take up 10 minutes of the 1-hour episode. So do I say, do we title the episode about garden suites, but then we start diving into different financing questions and refinancing questions? Or do we take a pie chart and see what percentage of topics were we covering on most and then determine which title? It's hard because, and people are really mean on the internet. I don't know if you know that.
Yeah. If they landed on that episode because of a title, and then they're like, you didn't even talk about it because they didn't stick around long enough to find it, or because
they failed to realize that this is a morning show, that we're drinking our coffee, that this is a live show at 7 a.m. that we do every morning. We like to talk about real estate investing. We like to talk about what's going on in our world and what's going on in the real estate investing world. It's not we're not pulling a topic and a guest for the day and talking about C-can container homes or whatever the hell. What we're doing is we're just having discussions. So and that's what this place is all about. It is about a place where you can bring your questions and get your answers, but also it's a community. It's a place to be every morning with other like-minded individuals who are doing what you're doing and having discussions about it. It is the Drive Time morning show for real estate investors, and we've been doing this for 6 years now, something like that.
I have no concept of time.
I don't know when we started. I don't know when we transitioned it over to the Real Estate Investing Morning Show, because we used to do guests, which was on the Real Estate.
You used to do guests.
I used to do guests on what was called the Real Estate Investor Dad podcast.
Something like that.
Something like that. And I hated it. I hated it because it wasn't what we have today. And I love what we have today. Yeah. I love waking up every morning and spending it with my beautiful wife and you beautiful people as well. I love this real estate investing orgy that we have every morning.
Okay, weird. Very weird. Yeah, hi.
So who do we have joining us in this orgy this morning? Who do we got here?
Don't do that. Don't do that. Don't make it awkward.
Who's live with us?
Remember, we only know you're here if you say hi to us.
Yeah.
So for this morning, Kirsten has come in and said, good morning all, with some energy, because there's exclamation marks, so I know there's energy behind it.
Yes.
Carmen, on the other hand, no exclamation marks. She just says, good morning. Okay. That's how I read it anyways. Manny's halfway there. He's got 1 exclamation mark. He's like, good morning. Francis is here, says morning. And Charn just popped a GM in the chat here.
Good morning, everybody.
Good morning to y'all.
If you're not joining us live on YouTube every weekday morning, then what the hell are you doing?
Yeah.
Good morning, Troy, as well. Troy's got a question we're going to be answering here in a little bit.
Yes.
If you want to be a part of the live show, if you want to be here with us in the morning and be a part of this, let's call it a community.
I like that word.
Community just sounds like one of those like communities up in the mountains where a bunch of families live together on like a, on a farm. You know what I mean?
That sounds fun.
Yeah.
Okay. Why do you got to make everything weird?
It's because they all worship Joseph, who lives on the top of the hill.
Yeah, no, that doesn't sound fun.
Prophet Joseph. Anyways, Prophet Poppy. There we go. What was I saying? Oh yeah, if you want to join.
Oh, like prophet, but profit.
Yes.
Profit.
Profit spelled differently. Yeah. Now everybody wants me to start like one of those big communities on the mountain where we can all
just
talk about real estate investing.
See what kind of sweater you're wearing tomorrow. Prophet Puppy.
Prophet Poppy. I like that. That's got a good ring. What was I saying? Hey, if you want to join us in the morning, all you got to do is just find us on YouTube. You can look up the Canadian Real Estate Investing Morning Show or Wayne Hillier, Real Estate Investing Coach. And we go live at 7 a.m. every weekday morning, Mountain Time. And you bring your questions, and we'll bring the answers. You can also feel free to bring some shenanigans as well. I got a satchel full of shenanigans every morning. If you guys like having fun too, because that's what it's all about. We're not just here to not have to make it so serious, right? Can we not make profits? Can we not make ridiculous amounts of money and build wealth and still have fun at the same time?
Yeah.
God, why are you guys so serious? Chill out. All right. Good morning to Dennis as well. I see you there.
Yes. Good morning, Dennis.
Congratulations to Dennis. Dennis. Congratulations to Dennis. Congratulations to Dennis, who picked up a new property last week.
Yes.
I was just chatting with him last night or this morning. I can't remember. Did I go to bed? And picked up a new property. Got a ridiculously high rent for that property.
Yeah.
Some properties are struggling. Some property types are struggling in Canada right now. Some properties in some markets are not struggling.
Yeah.
And Dennis has got his finger on the pulse.
Yeah.
So congratulations.
Great location, great property, great rents. I'm sure attracted great tenants. Yeah.
Great cash flow.
Nailed it.
Congratulations on that one. Mm-hmm. I actually just was.
Good morning, Leanne.
Part of that conversation with Dennis as well was that he says he has another property he's taken possession of in August, mid-August. And that's with a new joint venture partner. And I wanted to congratulate him for that as well.
Yes.
And we had a discussion, and it sounds like that new amazing property that he's going to be taking possession of is going to be on the Real Estate Investing Masters Edmonton bus tour.
Yeah.
He's going to be hosting a stop on the bus tour.
That's exciting. I love that. Wayne just told me before the show started. I was like, that is cool. I like it. Like it.
Yeah, very, very cool. So you guys get to see what the property that Dennis is picking up, and we'll be diving in. The numbers are going to be great on that property as well. Mm-hmm. If you guys want to get tickets for that Edmonton Real Estate Investing bus tour on August 22nd, go to www.reimasters.ca. It's under the events tab, or the direct link is reimasters.ca/Edmonton bus tour. Other upcoming events, we've got the Edmonton Garden Suites 101 workshop, which is not this Saturday, next Saturday.
Yep.
July 25th. 3-hour workshop. We're going to be talking all about building garden suites in Edmonton. And it's going to teach you everything you need to know about the lot requirements, size requirements, restrictions, setbacks. We're going to talk about financing. We're going to talk about building multi-unit garden suites. First, what we're building, Gabby and I, are the first of its kind in Canada. And we're building it in Edmonton. And I mean, these are so incredibly profitable.
So cool.
So incredibly cool, profitable. Extremely high cash flow. Yeah. We're building so much equity with these properties. It's just an absolute tremendous opportunity, and we want to share that with you guys. So get your tickets for that as well on July 25th. Again, go to reimasters.ca to get your tickets for these two upcoming events. And I might be having one more event in August as well. It's not confirmed yet. So throw a maybe marketing your calendar with a pencil for August 7th as well. There might be something else coming up with a really cool company called...
Oh, okay. Okay. Keeping secrets from me?
It's not...
I guess it just means I don't need to do anything for it, which is awesome.
Don't worry. I'll send you an email. I'll send you an email. Yes. Pencil it in for August 7th. I just... yeah, it's a little rainy, and it's been a crappy summer in Edmonton, but with all that rain, all the flooding and stuff. But I just love getting out during the summer months and hanging out with real estate investors and putting events on. I mean, it's so awesome. We're also in the process of planning our yearly retreat for the Real Estate Investing Masters Mentorship Program. So our students in the mentorship program, we do a yearly retreat where we get together and we hang out, but we also do masterminding and workshopping and in-person coaching. And it's a great opportunity for us to kind of reconnect and reignite our goals and revisit our intentions and going back to why it is that we're doing it and what is the things that fulfill us, like we talked about on yesterday's show, fulfillment. Going back to what fulfills us and why it is that we're doing everything that we're doing, and then making sure that we're recalibrating to make sure that we're staying on track and that it's intentional and purposeful to make sure that we actually do reach our goals. So I'm looking forward to that as well. We haven't figured out the dates for that, but if you guys are like on the fence about joining the mentorship program, REI Masters, now would be a really good time.
Yeah.
Because you would join, you get access to all of the initial, courses, which is going to get you up to speed on the fundamentals. And then immediately you jump into the retreat, which is in person. And we do nothing but goal setting and intentions and developing your roadmap for where you are today and where you want to go. So you can have a clear roadmap of what it is that you're going to do and how you're going to do it. And then you have us for 12 months to support you to see through that roadmap to reach those goals of what it is that you're about to do, whether that be building a fix and flip business, whether that be doing the BRRRR strategy, buying a multifamily building, or perhaps, building a wholesaling business, or perhaps you've got some money and you want to get the best possible returns for it and grow it throughout your, lifetime so that you can pass that on to your next generation. But you want to make sure that the little money that you have, it grows as much as possible, gets the highest returns, and it's leveraged to the max. That way you can pass it on to the next generation so that they can allow that to compound through generations, regardless of what your goals are or your intentions are with real estate investing. We're here to help. If you need help with that, if you need help developing a plan and education and guidance and coaching to see it through, to make sure you don't make any mistakes and that you have that assurance of being successful, reach out. This would be a terrific time to join REI Masters Mentorship Program. Yeah.
We actually had several last year before the retreat. We had several people join the program, and I think for them, well, I know because they told us that it was.
I see Leanne here.
It was such. Well, Leanne hasn't
Go ahead, sorry.
been a part of a retreat yet, but the people who joined and then boom had the retreat right away, and that was actually like our first time meeting them and all that kind of stuff.
Yeah.
It was a really great way to start the program. So
Matt joined. Right before.
Rita and Darby.
Rita and Darby as well. They joined right before the retreat. And so they were able to, that was a great opportunity for them to get to meet everyone as well, right?
Yeah.
Meet the community. And then, last year we did like an outdoor kind of, not picnic thing, but outdoor event. Yeah. With games and food. And we all got to meet each other.
Awards.
Long games and awards. I like that. Yeah. I like that a lot. It gave everybody an opportunity to get to know each other really well. Yeah. And kind of develop that community of like-minded individuals. Mm-hmm. And then we did the awards, and then we got into the goal setting and the masterminding, which I love it. I love it. I love everything we do and everyone that's a part of it, and just watching all of their successes, and then, you see all the things that people are doing throughout the year because they have those clear goals and clear intentions. It's just magical, absolutely magical. And so Leanne is patient. I think Leanne joined just right after the retreat, so she missed that one. But she's been waiting patiently all year, and now she gets to do her first retreat. Yeah. And I see Manny's here as well. And anyways, I digress. A little bit about us. I was going to talk about this yesterday, but we were talking about so many other things. We're taking possession of a new property today.
Yes, we are.
A new cash flowing rental.
Yeah. I'm really excited about this one. Wayne, I don't know, like, okay, I'm going to give Wayne some credit here because something really cool happened with this property already. We don't even have the keys yet, and something really cool happened.
This property is going to be
so
top 10. Top 10.
So this is a townhouse in Edmonton. And we have been busy filling vacancies recently, as you all probably know. And we have another property in this complex, and we were getting crazy demand for it. Like so many people, so many viewings, so many applications, and so many good applications. I was just
going to say, I think that I've gotten more requests for this property than any other property that I have never, like, I do not know why. I cannot figure out why.
I know why.
Okay.
I know why.
Is it me?
Location is fantastic. The neighborhood is incredible.
True.
And it just shows really well. It is a great property. It's bright. It's inviting. It's everything about it is great. But I think location is important in this instance.
I'll add as well, I went above and beyond. I think that because of where the market is right now, I normally, I'm not lazy, but normally in a good market, I don't really have to really try too hard.
Yeah.
But because of the status of the market right now, I went above and beyond and just like really overdid my listing and really said, okay, I want to make sure that my listing is the best listing out there, and I want to make sure my marketing is perfect. So that way everybody sees this thing. Yeah. And I put a lot of effort into this, and again, like, I have never seen so many responses.
Yeah. It was awesome. And like I said, like, receiving good application after good application after good application is rare these days, like so rare. I was shocked. And so I was saying to Wayne, I was like, oh my God, I'm having this really hard time. Like, there's this amazing application, but they don't want to move in until this date. And then there's this application, but and so I'm like, I don't know how to decide. And
you got to choose between tenants?
I got to choose between tenants, and they all really, really wanted it. And so Wayne was like, well, wait a second. We're taking possession of one a few doors down in the same complex in like less than a week. So this was all happening within this past week. So could we just like give it to one of them and slip the other one into this other one? It's like, obviously we can't show it to them and that sort of thing, but we don't have keys, but could we try? And I was like, yeah, can you get some pictures? So we got Calvin Hexter to send us some pictures, and we have a signed lease. We have first month's rent. We have a tenant all lined up to move in on I don't know what date it is within the next week.
Like
we don't even have possession yet, and everything's locked up.
Yeah, as soon as we sent the pictures, I mean, within, I don't know how long it wasn't very long, the tenant immediately responded and says, yes, I want it.
Yeah.
And that's like that. I've never done that before. Sometimes
you can get in early, like before you have possession, and show it
to people.
Yeah. And then of course you can lock them up beforehand, but like we didn't do that.
No, we just sent them pictures and we're like, hey, this one, sorry, it's been taken, but we have another one that's a few doors down. Do you want this one? And then we sent the pictures and they're like, yes.
Yeah,
and
they were so excited.
Gabby sends over a lease agreement and says, please send the first month's rent to secure it. Done.
Boom.
Without even seeing it. And I was like, wow, that's amazing. That's a first. We've never done that before.
Sight unseen. Yeah.
And it is, oh God, it's such a huge relief too, because I mean, filling vacancies is the most time consuming of all the tasks of rental properties. You know what I mean? It's like takes up quite a bit of energy and going through and processing applications and things like that. And we self-manage our portfolio. You guys know that, and we could teach you guys how to self-manage your portfolio too. But we have team members that we pay, so it costs us money to do that. It doesn't cost like nearly as much as what property management costs, but it costs us money. So I want to get that thing filled as quickly as possible.
Yeah.
And to be able to secure a tenant, today is what, July 16th we're taking it?
Yes.
July 16th. We secured a tenant. They've paid their first month's rent. They've signed the lease. It's done. And they're moving in 9 days.
Yeah, I think it's the 25th.
They're moving in
July
before the
25th.
1st as well.
Yeah.
Which is just so cool.
Yeah.
So cool. This has been an absolutely tremendous week for great tenants, great applications. I think we're very close to having all of our vacancies filled, except for the ones that got flooded.
Yes.
That's just another topic for another day.
We keep saying that. I don't know if we'll...
I will talk about the floods when the floods fucking stop.
Yeah, fair enough. But then it's like, what if we talk about it? Are we going to jinx it and it's going to start raining again? You know what I mean? Maybe we just don't talk about it
another day.
I
don't want to talk about it. It needs to stop.
Maybe in a few
fucking
years.
Raining.
Maybe in a few years.
In a few years?
Yeah. When we can be certain. I don't know. Yeah, it needs to stop raining.
It needs to
stop. It needs to stop
raining.
Yeah.
For God's sake.
Yeah.
Ugh. I was having a good moment thinking about that property we're taking possession of today. And you had to... Did I bring up rain?
You brought it up. You brought up the floods.
Okay. Anyways. What a great day.
Yeah.
What a great day.
Excited.
Okay. So, I'm excited to get keys to that today. I'm going to go in there. We got a little bit of work we got to do. Not much though, right?
No, I don't think so. I need to go through the inspection again and just get that list together.
A little bit of plumbing.
Yeah.
A touch of electrical.
Yeah.
Clean some
Should be
vents.
pretty easy.
Clean some ducts.
Yeah. Yeah. Oh, quick. Sorry.
And get the cleaner in there, but it's relatively clean.
Yeah. Doesn't
require much. So this is going to be a quick and easy in and out, and get the tenants in, and then on to the next one. Yeah. So that's what's going on for today. I'm just taking a look at what we're going to be talking about today. So we have a question, a follow-up.
Where do you want to start?
We have a follow-up question about garden suites from yesterday.
Two follow-up questions on garden suites.
Maybe I missed it. You can fill me in on the break. And then we have 2 questions about financing. One about commercial financing.
Oh, okay. That was also about garden suites. So.
Oh, okay. Got you.
Yeah.
Commercial financing.
Yeah.
And another question about financing for refinances. So we got some great questions today. If you guys have any questions and you're here live with us, feel free to put it in the chat. Let us know a little sooner than later, just so that I'm just trying to time out how much we talk about for the next 30 minutes. But additionally, if you guys are not here live with us, or perhaps you think of something later on today while you're driving and you're looking for some free coaching, feel free to send an email into info@reimorningshow.com. Send your question in. We can answer your question for you for free. We'll provide free coaching for you, and we do it every morning. Send those questions in. We can help you out, and then hopefully you can get that confidence and that clarity to go and take some action. Let's take a quick little commercial break, and then when we come back, we're going to get into these questions.
Real estate investors need to treat debt differently than homeowners, and at Kirkland & Brennan Mortgage Group, we understand that. For the last 11 years, we've helped real estate investors plan and build their portfolios. We understand how to help you avoid fees, penalties, getting yourself stuck, and making sure that the deal you're doing today doesn't stop the deal you want to do tomorrow. You can reach out to Keaton, Keaton, at kbmortgages.ca. Put plan in the subject line, and we'll help you build a plan and then realize it for your real estate goals. We also coordinate with the other professionals like your accountant, lawyer, realtor, and we will help you build your portfolio. So reach out. We'll do our best to help. Thanks, guys.
You've got showings, lease signings, suite renos, condo board meetings, credit checks, mortgage financing, and every so often the tenant clogs the sink because they shove macaroni down there. Stop. Breathe. Leave the bookkeeping to Fingo. Fingo is specialized real estate bookkeeping by real estate investors with tailored services for maximum returns. Save time. Enhance your returns. Claim the plumbing repair for that ridiculous macaroni fiasco. Book your free consultation at fingo.com.
Summer. While everyone's getting distracted, this is when the market gets quiet. Not because the opportunities disappear, but because the people do. Vacations, long weekends, these are the distractions I'm talking about. And that's exactly when serious investors make their moves. At Calvin Realty, this is one of our favorite windows. Less competition, more flexibility, and sellers who are actually open to negotiating. While everyone else is stepping away, we're stepping in. If you're looking to buy right, not just buy fast, this is your edge. Calvin Realty. Opportunity doesn't take time off.
Hoi hoi.
Hello.
Okay. Let's start with the garden suite question.
Okay. Okay, so question stemming from yesterday's podcast, we were talking about the garden suites, says, you keep mentioning multi-unit garden suites in Edmonton. How do I know how big I can build? So I think they mean like how many units?
Yeah.
Or maybe size. I don't know.
And so when I say multi-units, you can go back to 2 episodes ago and yesterday as well. We were talking about this. We were talking about the fact that most people think garden suites. You think you can build a single ground level garden suite, or you can build a garden suite above a garage. Sometimes they call them garage suites. But what most people don't know is you can build multi-unit garden suites, meaning more than one. In some cases, the most common that you're going to see in the city of Edmonton or other cities like Calgary, you'll see a side-by-side garage with 2 garage suites on top. And that was new, started coming in, started seeing those a lot in 2024 after a lot of the zoning changes happened in across Canada, but more prominent in Edmonton and Calgary. And so there's that would be considered a multi-unit garden suite. But what we started developing, and again, go listen to the episode from 2 days ago, is duplex garden suites. So instead of having a garage underneath, what you could have is a unit on the bottom and a unit above on the second level. You could even build units in the basement if you really wanted to, in the back, which is totally possible. I don't recommend it. Trust me, I've looked into it. But you can build as many units as you want, as long as it fits within the requirements from the city and the zoning. And so the projects that we're building 4 units, a 4-plex in the backyard.
And what does that look like? Visualization.
It would be 2 units in the bottom, ground level, and then 2 units above. And it's the first of its kind in Canada. Nobody else has ever built anything like this in Canada. And we have numerous projects on the go right now in Edmonton. And we're extremely excited for it. It's like the numbers are absolutely phenomenal. Absolutely phenomenal. So to answer your question, how many you can build, again, it depends on your, in Edmonton, well, I'll just say anywhere. It depends on your city's zoning and building requirements. So what you need to do is you need to look into what you are allowed to build and what the restrictions are to determine that. Now, Edmonton has the most complementary. Edmonton and Calgary have the most complementary rules. However, the reason why we're putting such a heavy focus on Edmonton is because the numbers don't work in Calgary nearly as well.
Yeah.
And, there's a lot of pushback from people. Oh, the numbers don't work. Yes, you're right. And in a lot of cases, garage suites, I do not see the value in them whatsoever. The cost to build them and the rent that comes in for it, it does not make any sense. Now, Edmonton Garden Suites Limited, a company that I've partnered with, a builder that I've partnered with, we've developed a way to make garage suites and garden suites work.
Yeah. And
I can tell you more about that. But the way to make the numbers work is the more you build, the cheaper the building cost gets. because a lot of the costs are actually in a lot of the setup and prep and the utilities and things like that. So the more you build, the more units you build, the less the overall cost per door gets. So that's why we're all about maximizing as many units as possible and utilizing the space to make sure that we can build as much as possible to make sure we can keep the building costs down, which is going to increase our profits, our return on investment, and ultimately our cash flow. So the way to find out, like I said, is to talk to the city. If you want me to give you a faster answer, we're going to be diving into all of this at the workshop next Saturday on July 25th in Edmonton, the Edmonton Garden Suites 101 workshop. That's where you want to be, because I will literally go through all of this for you. And it's only $20 to attend. All right. And it's going to be an absolutely great time. I'll go through all that with you. I will teach you how to go about the height restrictions, the setbacks, how to determine. And we even have models, like templates, models that you can use that have already been tested. And the city of Edmonton has approved them that you can use. You can use our drawings. And you could build these exact same models in Edmonton right now. Just like take it, plug it right in. And so we'll be showing you those as well.
At prices that work.
Absolutely. And we'll show you the cost to build it as well.
Yeah.
And that's the other thing, is that when you build your own, you got to start from scratch. You don't know what those costs are going to be. There's going to be a lot of variables. We can literally have set prices for these. So we'll share all that information with you. Edmonton Garden Suites Limited, our partners, are going to be there as well. I'm going to be there. Gabby's going to be there. So many other like-minded individuals, real estate investors, are going to be there. Everybody's going to be there. Everybody's coming. Everybody's coming. And financing as well. Lastly, we'll help you out with where to get your financing to finance this construction as well. But it really just does come down to size and numbers, to answer your question simply, right? And we can help you with that next Saturday.
Awesome. Love it. I think that we should dive into the question that is finance related, but also stemmed from the Garden Suites.
Okay, so there was a question about financing garden suites?
Yes.
Okay.
If that's okay.
Yeah, for sure.
Okay, question number 2. Do you think you could purchase a residential property as a commercial with the understanding that you are building 4 garden suites immediately?
So could you get commercial financing when so this individual wants to buy a residential property, a house,
Yes.
and then build garden suites on it?
Yes.
And they're wondering, can I get commercial financing on day one
Yes.
because of my intentions of building multi-unit garden suites in the back?
Yes.
There's a much simpler answer that
Yes.
we can just eliminate the garden suites just for a second. There's a much simpler answer. That many real estate investors don't know this. And it's very rare that I would provide this advice, because there aren't many circumstances where it makes sense to offer this advice. However, it is an option. And it's an option that I have, coached to some of our investors in the REI Masters Mentorship Program before as well, for similar scenarios. But commercial financing is not only exclusive to properties that meet a minimum of 5 doors. You can get commercial financing on residential properties. You can. You just got to buy them through a corporation. So if you are to purchase a residential property, whether that be a single family or a duplex, you can buy it through a corporation and get commercial financing for residential properties. And we've done that.
Yes.
In fact, I do that quite a bit. At the point where I'm at right now, all the properties that I buy and put the financing under my name, it's all commercial financing. And that's because once you cap out on residential financing, you might have to go the commercial route. The issue is that I know I'm over answering this question, but I'm answering 10 other questions for people that have questions that haven't asked it yet. The issue is that they're a little stricter on the rules. The way that they qualify obviously is different. they use the DSCR ratio. They qualify the property more than they qualify you, similar to other commercial financing or other deals that you're probably familiar with. And it's just that they're a little stricter depending on the lender that you go with. Like the DSCR ratio can be quite difficult to meet. In a lot of cases, it might be like a 1 to 1.25 ratio, meaning that for every dollar of expenses, they want to see $1.25 worth of rent. And a lot of the deals that people are doing in Canada, it's really hard to meet that ratio, to meet that criteria. So that's one part of it. The other part is that the terms for the financing are not as good as financing you would get for a residential property under your name, meaning that the amortization might be shorter. So you might not be able to get a 30-year amortization. You'd be getting a 25-year amortization. Or the loan to value might be a little bit less. Instead of getting 80% loan to value, meaning 20% down, you might have 75% loan to value, meaning that you got to bring 25% down. And that's how commercial financing works. They also, in a lot of cases, have lender fees that you have to pay up front, application fees and things like that. So ultimately, the terms are less desirable. It's more expensive and it's harder to qualify because of the strict criteria that they have, or strict rules that the financing rules that they have. So I don't recommend it right out of the gate. And I see so many people, they're like, oh, you got to buy all your properties in a corporation from day one. And I'm like, dude, shut the fuck up. That's like the worst advice ever. Take advantage of the amazing financing that you can get in your personal name first, right? For residential properties. Then if you run out, then go through corporation, get commercial financing. But commercial financing sucks. It's not as good. The reason why I leverage, joint venture partners so much, because I can get as many mortgages as I want. Not everybody can say that, but I can get as many mortgages as I want. It's just the terms suck.
Yeah.
And because the terms suck so much, it's very hard for me to actually get that deal across the finish line. Now, these deals that I'm purchasing right now, no problems whatsoever because my cash flow is so phenomenal. But in years prior, it's damn near impossible to get my deal across the finish line, to get that application approved, because the cash flow has to be so incredibly high in order to be able to qualify, right? And even then, even when I do, is my return on investment and my cash flow nearly as good as if I were to, compared to if I were to purchase it through my personal name or through, normal residential mortgages? No, not at all. So it makes a lot more sense for me to leverage my joint venture partners and the financing that they can get in their personal name, and our numbers are significantly better. Yeah. Again, a very long answer, but I wanted to share that with you guys because it's valuable. And just do know that there are additional options when you run out of financing on your personal side that you can go with the commercial residential side. Just know that you're not going to be satisfied. All these numbers that you were getting before you're not going to be getting the same kind of numbers anymore because the financing is going to ruin it. But if you want to keep buying in your name, you can. Yeah. I recommend joint ventures. It's way better.
Is in the comments, is 25-year amortization common for a commercial?
Yes.
Yeah.
Yeah, you betcha. It's very, very rare that you're going to get a 30-year am. Now, I got a couple lenders that I know that will do it for me. It's not always going to be the case, but like I said, join REI Masters Mentorship Program, and I can help you guide you through this. You know what I mean? This is the guidance that I'm talking about, is like coming up with a plan. It's hard to just give like advice for one situation.
Yeah.
You know what I mean? Once I know the whole picture, I can provide you the best possible coaching and the best possible guidance as to whatever you're working with right now compared to where you want to be. That's what we're talking about when we say a roadmap. If we know what the full roadmap is and where you want to be in the end, it's so much easier for me to tell you where you should go, how you should do it. Would I recommend that someone buy a property in a corporation and get commercial residential financing from day one? Typically, no. But if I look at your full picture and where you want to go and what you got right now and what the plan is, it might make sense. Mm-hmm. It could, right? But without knowing the whole picture, it's so hard for me to give that kind of advice. But there are lots of different tools in the toolbox, and there's lots of different ways to go about doing this. The more context that we have to what it is that who you are and what it is that you're doing, the easier it is for us to develop the path of least resistance, right? So reach out about the mentorship program. I can help you with that stuff. And yeah, it's expensive. It's $15,000 for 12 months. You're getting all the courses, you're getting all the documents, all the contracts, you're getting us. It's expensive. For most people, that is like a ridiculous amount of money. I completely understand. And I do not, I wouldn't pay that without absolute confidence that I'm going to be able to get exactly what I need from it. But that's the thing. If you have a problem and something's preventing you from moving forward, and you can see that $15,000 investment as a solution to that problem, then you can ask yourself, okay, if I pay this, what am I going to get from this? What solutions am I going to get? And if you can see that it's going to give you the full roadmap of everything that you need to know about how to get to the goals that you want to reach, and provide you all the resources and the guidance and the confidence to know that you're not going to misstep, then that investment might be worth it. If you could pay $15,000 to make $15 million in 15 years, is it a good investment? That's up to you to determine. It's not up to me, right? I see the value in it.
Yeah.
And I paid for my education and coaching, which have helped me overcome a lot of my hurdles and my roadblocks. It's entirely up to you if you see the value in that, right?
Yeah.
But back to the original question.
Can I reframe the question?
Sure.
Because I don't think how the question came out from this listener is exactly what the question, how it needs to be answered. So instead of, okay, the answer is yes, you can get commercial financing right out of the gate, knowing that you're building the garden suites or that you're not building them. You can get commercial financing. They're answered. But I think more so, maybe you could explain briefly just how it works. Like when you purchase this single property and then are building these suites on it, how you obviously start with a financing product that gets turned into something else.
You mean, so there's a purchase, there's financing for the purchase of the property.
Yes. And then you're building these suites. So then how do you
finance the construction?
Well, maybe that, but then the end. What's the end financing like?
Right.
You know what I mean? I think there's a disconnect between like, am I just getting a product at the beginning that's going to be what I have for this entire when it's completed, or do I start somewhere and then it turns into something else? Like, do I refinance at the end at a different product? You know what I mean?
Right. So one of the biggest hurdles that we had with this whole project, and then when I say the project was the dream of building multi-unit garden suites. Again, first of its kind. Nobody else has ever done this before. The fact that nobody else has done it before, and it was all a concept in the beginning, I had to come up with, how is this going to work? How is this going to be obviously something that people actually want to rent? How is it going to be profitable? How is this scalable? And then lastly, the thing that ruins the thing that ruins every great idea I've ever had, how do you finance it? Because the properties that we purchased, us and our partners, we had to do it all cash. So we purchased the property in some cases, and then we paid all cash for other properties. We purchased the property with a normal residential mortgage, and then we've been paying for the construction all cash, which is not realistic for most real estate investors. Hence why there was no reason for me to share this with anybody early on. Like I could have shared look at this cool thing, I'm building this, and like I'm this new great idea that's going to change real estate investing for investors across Canada. I could have, but it would have only been for my ego, because there was no reason to share that with you guys if you guys can't even do it. Nobody could realistically build one of these projects unless they had $750,000. And is that the best use of your funds? Probably not. I mean, maybe, but it's a great opportunity, but it didn't make any sense. So I just kind of kept it on the DL until I had it all figured out. But that was one of the biggest hurdles and roadblocks that we had, was like, how are we going to finance this? And no lenders had an appetite for it early on because it was still a concept, and because they'd never seen anything like that before. To buy a residential property, but then to develop, a multi-unit garden suite in the back. There's been situations where people build garage suites in the back, but normally they would blend that in, but the cost would be significantly less. So anyways, lenders weren't really on board with it. The base, what ended up happening was they said, go and do it first. Prove it. Show proof of concept, and then we'll look at it. And now that we're coming upon completion of our first ones, now they are on board with it. So I had to work with multiple lenders and have so many different meetings and conversations about this in order to get it to a point where now they will provide construction financing for these projects. And I've secured those lenders now so that I can share those lenders with you. So if you guys are going to be building, I will share my contacts with you. If you reach out to Edmonton Garden Suites Limited, go to edmontongardensuites.com. And if you're going to be working with us, I will share my lenders with you that will provide financing for this. And they provide phenomenal financing. One of the lenders specifically, what they'll do is they will help you purchase the property, and they will give you a draw mortgage for the entire build. So, there'll be the initial deposit with the builder, then there'll be the pre-drywall deposits, and then, the 4 deposits throughout the construction. They will give you a draw mortgage and give you a draw every single time so that you can pay the builder. And then upon completion, that's when, just like any other commercial property, you would get it fully leased up, right? Get all the leases in place. Then what they're going to do is they're going to do a full appraisal to determine the appraisal of the property based on the rents, the NOI. And then from that point, once they establish the value of the property, they will allow you to refinance the property at the new value. And then you'll get a new mortgage at that point. So this is where, one of the best parts about this is that because we were talking about earlier about turning it from a residential to commercial appraisal. There's a dramatic lift in value because of the way that it's being appraised. And this is where you're going to get a lot of your initial capital back.
Yeah, that's huge.
It's essentially a BRRRR.
Yeah.
Right? You buy a residential property. You're going to construct your garden suites. You're going to increase the value of the property. You're going to rent it. Then you're going to refinance it and get a lot of your money back. And then you're going to repeat. Right? So it's really cool. But financing is always going to be
the tricky part.
Yeah. And we've already done that for you. We've taken care of that for you. And we have lots of different lending institutions that we can refer you to, depending on your financial situation. We can help with that. We want to make this an easy process for you guys so that it's seamless, it's profitable, and ideally you get a lot of that money back so you can do that whole repeat. That's what we want. We want to recycle these funds to be able to build multiple projects. And you can just imagine if you do it right and you buy it right and you keep your costs nice and low, and that's what we're going to help you with, then there's a strong possibility you're going to get a lot of your money back and you're going to be able to repeat that process. And if you're building 5 units per project or 6, and you repeat that just a few times, just imagine how dramatically your portfolio is going to grow. Mm-hmm. Your portfolio is going to grow fast, and it's going to be full of nothing but strong cash flowing, low risk properties with tremendous amounts of equity as well, because you're building so much equity in each of these. You know what I mean?
Yeah.
Like the 4 projects we have on the go, $250,000 on each one, right?
Yeah.
There's 4 times 250,000 is $1 million worth of equity built, right? It's crazy. Absolutely crazy, the potential for it. So hope
Carmen,
that answers your question.
Yeah, Carmen, hopefully we hit it. I had to do a little maneuvering of what I thought you might be asking, and I hope that we got it.
Yeah, like I said, if you're planning on using Edmonton Garden Suites, I will help you with everything.
Yeah.
I will help you with the whole process and provide free coaching for that, because I want to make sure it all works.
I think that's one of the things that at least I'm seeing right now. I haven't really talked with you about it, but I see questions come in like during the live chats or, online and stuff saying, I reached out to a builder and they said that a garden suite's going to cost this. Like they see that the discussion around garden suites is starting, but they're not willing to come and learn what we have literally packaged and said, no, but here, like this is, we've made it work. We've got lenders. This is how it's going to cash flow. Like here's this package. If you take it, You don't need to think about it.
Yeah.
You don't need to contact anybody. You don't need to do anything except say, "Oh, thank you," and get on board with the team, right? But if you're going to just be reaching out to builders and trying to do it yourself,
it's going to take you years.
You're going to struggle.
You don't need to reinvent the wheel, is what we're saying.
Yeah.
Is there a question for Stuart here? Sorry.
Off topic.
Off topic?
Yeah.
Go ahead and read it.
Okay.
Sorry, I can hardly see it. I'll answer it quickly.
Stuart says, what's a better investment? Sending you $15,000 for a course or $50,000 to set up a deal with you and learn on the fly?
Well, I'll answer it honestly. First of all, the REI Masters Mentorship Program is not a course. It's a mentorship program. It's working with us, and we provide coaching and mentorship. And then it comes with all the courses. So it comes with the 25 workshops that cover rent to own, fix and flips, the BRRRR strategy, wholesaling, financing, you name it, everything, agreements for sale. It covers everything you need, because once we establish what your roadmap is, we have to determine which courses are relevant to you, which workshops are relevant to you. I don't want you just to take everything, because then you're just going to be all scatterbrained and can't figure out what to do. We're going to figure out what's right for you, for your plan, and we're going to stay, it's all about focus. We're going to stay focused on the things that you need to be working on, so you actually get them done. Because too many people take too many fucking courses and they're all over the place and they're like, oh, I want to try this. Oh, short-term rentals. Oh, multifamily. Oh, that looks pretty cool. Oh, Texas. And they cannot figure out what the fuck they're doing. And then they just don't ever do anything. So my whole thing is about being intentional and staying focused on the intentions and actually getting it fucking done. Now, our mentorship and our coaching is established in a very particular way. We only give you 2 to 3 things to work on at a time. Go finish your 2 to 3 things. My students right now, if you're not doing your 2 to 3 things, your action items, go fucking do them. Those are the 2 to 3 things I need you to get done. When you're done those, I'll give you 2 to 3 more. We're not going to give you a giant fucking list of things to do. We're going to give you 2 to 3 things. You need to go get those fucking things done. As soon as you're done, I'll give you 2 or 3 more. And if you do that, you'll be constantly moving the needle closer and closer and closer to your goals. That's how we stay on track, right? So the courses are there to support you. The resources are there to support you. I and Gabby are here to support you to do those 2 to 3 fucking things that you're supposed to be doing. Stay on track. Okay? That's what the coaching is all about. The mentorship is the support that we provide from you. Everything else. Because I'm in your corner. You've got me in your corner. If you can't figure out where to get the financing, I'll help you get the financing. If you can't figure out how to pitch your joint venture partner, fuck it. I'll come to your meeting with you for your joint venture meeting, and I will tell them how amazing and great you are. I will do whatever the fuck I can in order to see you succeed. Whatever that missing gap is, I am there. I will lay down so that you can step over the puddle. Okay? I will put my jacket down for you, or I will literally plank over that puddle and you can step over top of me in order to get you to where you need to be. That's the mentorship. And I go above and beyond for all my students. I don't make guarantees I'm going to help you find money. But if you're working really hard and you're doing the action items and I can see that you're fucking committed, I will go above and beyond and do whatever the fuck I can. That's mentorship. That's me caring about what it is that you're doing. Everything else that's included is all to support you in that. Mm-hmm. The contracts, an agreement for sale contract, a joint venture contract, you may never even use it. It's there though. It's a full library, a master's vault of everything you could possibly need. So that's what, it's not a course, it's a mentorship program. And it's only $3,500 to renew every year after that. So it's not $15,000 every year, okay? Because you're getting a lot up front. Now, that there can provide you everything that you need in order to be successful in real estate investing. Regardless of where you start, we're going to look at where you start. And we're going to figure out how to get you to the end. Whether you start with $1 million, whether you start with $5, whatever, it doesn't fucking matter. We'll start here. We'll get you there. We're going to, what happens in between now and at the end is what's important. And we have all the resources and guidance and experience to be able to teach you that. Okay. So the mentorship program works if you're willing to do the work, those 2 to 3 action items. Okay. At a time. $50K to set up a deal with you and learn on the fly. I just don't do that. And it's a great offer. I mean, you know, a lot of people are like, yeah, give me the $50K. I'll do a deal with you. Here's the thing. There's legalities around joint venture partnerships. I don't know you. I don't think I've ever met you. I think you're a great guy. You're here every morning and you're really funny. I think you're great, but I don't know who you are. And there's rules around who I can partner with. And I can't partner with you because I don't have a relationship with you. So it's not going to happen. Even if you did and you learned on the fly for one deal, are you going to learn everything else that you need? Everything else that I just explained a minute ago? I can do it with you. I can show you everything on that particular deal, but are you going to learn everything that you need? Are you going to have all the contracts? Are you going to learn, like, how do you know whether rent to own makes more sense than a rental property? You won't know because I didn't get a chance to teach that to you. And even if I did teach it to you, is it right for you? There needs to be more context. So I think the mentorship, what I tell people is, like, some people are like, I want to partner with you. I'm like, take the $15,000 course. Because if I do a deal with you, I'm taking half your profits. Wouldn't you rather just pay and then learn how to do it yourself? I can literally teach you everything that I know and give you all the resources. And then you can do so many more deals after that by yourself. Why would you give up half rather than just learning everything that I know and what Gabby knows, and then just doing it yourself and then scaling it? Right? But it really depends on you. If you're just looking for something incredibly passive and you don't want to learn all this stuff and you don't have the time to do it or the desire, then yeah, partner with somebody. That makes a lot more sense. But my advice is to always learn how to do it yourself. Why am I doing it for you when I could just teach you how to do it?
Yeah.
And it's not hard. I mean, look at the stuff that you guys have learned so far already for free on the podcast. This isn't hard stuff. You just don't know what you don't know. And I need the opportunity to be able to teach you that. And it takes time so that you could know what I know and you could do what I do and what Gabby does. Okay. All right. How many more questions do we have?
One.
One? Perfect. I can answer that.
Okay.
Back to financing.
Are you sure?
Yep, you betcha.
Okay. Okay. From Troy. Quick question for the show. On my 8th mortgage now, and my rates keep getting higher and higher for refinancing. Here's my latest offer. Am I unaware of more competitive offers, or is this just the name of the game as debt ratios get higher? This is the offer to refinance my $120,000 mortgage, which is currently at 3.55% with Scotia, to pull $70,000 in equity out. So the offer for 1 and 2 years is 5.94%, 3 years at 5.99%, 3-year variable at prime plus 0.94, which is 5.39. Or 5-year variable, prime plus 0.79, which is 5.24.
I don't think it has anything to do with the debt servicing ratio. Is that what he said?
Yes. Debt ratios.
It's so hard to say. It is so incredibly hard to say because, first, I do not claim to be a mortgage expert. I know a lot more about mortgages than most people, but I like to stay in my lane and I don't like to talk out of my ass. So unless I understand something inside and out, I try not to speak on it because, one, I could look like an idiot, which I don't want to do. I don't like looking like an idiot. And two, I might not be providing you the best possible guidance and coaching. And that's not fair to you. You came here for answers. I want to give you, you trust us. I want to give you the right answer. So I try not to. But the truth is that financing is so incredibly complicated. And sometimes the rates that they offer me are different than the rates they offer you and everybody else. You might have a crappy credit score. I don't know. You could, or you got a great credit score. I can't say for certain. They might be looking at your portfolio, and maybe your portfolio doesn't have as much cash flow on the existing properties as they would like. Maybe it's got great cash. I just don't know. And your mortgage broker is going to be a much better person to talk to about that in order to figure out why. Now, here's the other thing is that, like, when we're talking about like roadmaps and things like that and being intentional, one thing that people just fucking fail to do, and I don't understand why. I'm not saying this about you. I'm just saying it just in general, is that they don't speak to a mortgage broker on day one. They don't speak to an investor-focused mortgage broker on day one. Nobody ever starts with a clean slate on day one with intentions And so what they do is they chase the best possible interest rates with the best possible terms with the bank that they love the most, that's offering the coolest promotion. And they just focus on, how do I get as much cash flow as possible first? And then they start running out of options because they went to this lender, then they went to this lender, then that lender said no, then they went to this lender, then they said no. And now it's like, fuck, where do I get my mortgage from? And they're like, oh, this one will say yes, but they want, 5.99% interest. They're offering 5.99% interest for 3 years. And you're like, oh, that's not as good. Gabby's getting 4.02. Why the fuck am I getting 2% higher? That's not fair. Must be my portfolio. It's probably the way that you went originally. And so what I've learned from some very smart people like Keaton Kirkwood, who's a tremendous investor-focused mortgage broker who's coming on the show next Wednesday, is that you need to be intentional from day one. And sometimes going to the crappiest mortgage product first will actually get you more products later. More mortgages later. So instead of, just imagine, and this isn't always the case, but you need to talk to the investor-focused professional who's going to help you with this. But instead of going with the best ones first and then settling for the worst ones, what if you started with the worst ones, then you worked your way to the best ones, and then that would allow you to get more better mortgages? Because every bank and every lender has their own individual policies, and those policies change like the weather. But if you know which lenders to go to first, which would mean that you would get more properties later at decent rates, that'll mean that you'll get more properties. But it'll end up still being the same thing. You're still going to go to those great lenders later, you just don't go to them first. Mm-hmm. You got to be strategic about it. And maybe you're a little more strategic about which mortgage products you put on which properties. Maybe the ones that have the mortgages you're going to be getting that have the worst terms, you put those on the best properties that have the best cash flow and the best numbers. And then you put the ones that aren't as good, maybe like the one that has a 25-year amortization at 5.99%, you put that on did I do that opposite?
Yeah.
Maybe you put that one on the better properties. Right? So it requires a little bit more consideration and planning. And
can I add something in here?
Just say really quickly, the students that join our mentorship program that come in and we're like, I've got 5 properties, but I'm capping out. Help me scale my portfolio. First thing I want to say is sell your whole portfolio and let's start from scratch because you started it all wrong. Mm. Right? I can't provide miracles. I don't have a guy that can get you more mortgages. You know what I mean? If you're nice to him, because I know a guy. No, it's like you gotta begin with the end in mind. Yeah. And you have to plan from day one. Otherwise, you're playing with your hands and your feet tied, and you're trying to make it work. You're trying to find that back alley mortgage broker who's going to give you unlimited great mortgage rates. It doesn't work that way. Right? It's complicated. So I love working with new investors who're starting from scratch because you're malleable. You know what I mean? You're moldable. Sorry. Like I can work with you. I can see what you have. I can see where you want to go, and we can build out a plan that's intentional from day one, not from day 35. Mm-hmm. Right? So what were you going to say?
Oh, just on the topic of mortgage rates, I was just going to add to that, which all was perfect information, but just for people to know that also mortgage companies or lenders, they also kind of go in cycles. So sometimes they're going to have a lot of money that they want to lend out, and they're going to put very favorable terms and rates together. And they're like, hey, it's go time, guys. Like, let's go get all this money like out in mortgages and secured, and they'll put together these great rates for people, mm-hmm. for new mortgages, for refinances, whatever it may be. So you're going to see that like even brokers will start to kind of like lead all of their leads into this one product because it's so favorable right now. And then they'll have all their money deployed and they'll be like, okay, guys, we need to tighten up. And all of a sudden, like, these are now, their rates have kind of shot up. It's not always what's the current lending rate. And then that's where everybody's going to be sitting. And no matter who goes to try to get a mortgage, this is what you can expect. It's also each lender and where they are in their cycle of lending out their money. So maybe Scotia in this case is tightening up right now and not trying to deploy a whole bunch of money, and their rates are sitting higher than if you were to go to these other guys who have a whole bunch of stuff that they're trying to get out right now and have a really great deal right now, right? So there's always so much at play that you don't know. It might be you. It might be you and your credit rating and your debt ratios and your portfolio. It might be you, but it might also just be Scotia and where they're at right now.
Yep.
Right?
We don't know, though.
We don't.
We don't know,
but
though.
These are all just things to know and to kind of have a general understanding of, to help you be like, okay, maybe there's more to dig into here.
Yeah. Yeah, and find a mortgage broker that can explain it to you.
Yeah.
You know what I mean? And be honest with you. And that's why we love working with Keaton Kirkwood so much, is because he's just as honest as I am. He's going to tell you if you know exactly what you need to hear. And he too loves working with new investors because it's so much easier to help you because you're starting on the right foot, right? Yeah. And it's harder for people to come along and be like, well, here's what I got. I need you to get this done. I need you to get this across the finish line. I need you to go, beg this lender to get me these rates. Like, it's hard, it's difficult. So begin with the end in mind. That's one of the most important things that I could recommend. And thank you, Stephen Covey, for teaching that one. But that's the best advice that I can give you. I don't know your circumstances, but I hope that we provide a little bit more insight and perspective on how lending kind of works. That way you can get a better understanding of what's actually going on. But the way to find out is to talk to your investor-focused mortgage broker and say, hey, what's going on here? Mm-hmm. And if they provide you some advice, fucking listen.
Yeah.
They might be the first person to say that, like, you got to sell that one over there. And you're going to be like, well,
this is crippling you.
Well, fuck, that thing's going up in value. Why would I sell that? It's one of my best performing properties.
Stopping you from buying more.
That one right there, by selling that or refinancing that or doing whatever, or taking a small little, 2 steps back, might help you get 10 steps forward with your whole overall portfolio. But I can't say for certain. That's why you got to talk to your investor-focused mortgage broker and ask them, right? And take their advice. And even though it might not seem right for you, big picture, it might actually help you reach your goals long-term. Mm-hmm. Okay. All right, that wraps up today's show, guys. We really appreciate you guys sending in all these questions. This was fantastic. I had a lot of fun. Tomorrow is Friday. We haven't done any shenanigans or any rants in a while. What should we talk about tomorrow?
CBD. What?
If you guys got anything you want us to talk about, any topics or any questions, just send in an email to info@reimorningshow.com. We will gladly answer your questions or talk about whatever topics you're interested in business or in real estate investing. We'll see you guys tomorrow.
Bye.
Thanks for listening. Want to be coached personally by Wayne and Gabby? Then you should join the Real Estate Investing Masters Mentorship Program. Details are in the show notes to get started.